Oil prices rebounded on Wednesday after losing over 2% in the previous session, driven by a drawdown in US crude inventories. Brent crude futures were up 25 cents to $79.80 a barrel, while US benchmark WTI rose around 0.2% to trade at $75.70. Investors have been seesawing between potential supply losses from Libya amid political concerns and worries about global fuel demand. Prices are bouncing back from Tuesday's decline, which snapped a three-day streak of gains of more than 7% as concerns about low refinery profit margins weighed on expectations for fuel demand, as data showed global consumption growth has been lower than forecast this year. Let's get more on this now with Naeem Aslam in London. He's Chief Investment Officer at Zay Capital Markets. Welcome back to the programme, Naeem. Now, how much of this price increase is due to escalating tensions in the Middle East?
Sure. Thanks for having me. Look, I think investors and traders were expecting oil prices, such as Brent oil prices, especially, to go well above the $100 barrel because there was just like so much concerns that, okay, how big this particular retentionary action from Iran and Hezbollah is going to be on the back of the attacks that Israel did, and especially the huge military presence. And the concerns were that, okay, if there's going to be a wider conflict beyond the borders of Iran, such as the allies of Iran are likely to get involved into this one. But now we see that, okay, the reaction is very much contained. So we did not see the prices moving significantly higher. So what we think now, I think it's not a stretch statement to say that going into the rest of the 2024 and also in 2025, Brent oil prices are more likely to consolidate in a range of a 70 to all the way to 85. We do not see any substantial upside in terms of oil prices because everything will revert back towards its original mean, and then the main fundamentals, as you've mentioned, supply from Libya, supply chain altogether from OPEC, and what OPEC is going to do, and more importantly, it is going to be the conversations about, okay, if supply is a concern, is US is going to join the OPEC cartel in curtailing that particular supply equation.
Right, and we mentioned Libya. How big of an impact could refinery closures there have on oil prices?
I mean, that's a very, very small part of the equation in terms of a Libyan oil coming into the market and the refineries going in a shutdown period or in a maintenance period. So we do not expect huge or any significant impact in terms of our oil prices. Yes, you will see a little bit of a bump, which is very natural in the oil, crude and Brent oil prices to experience that. But this isn't something which is going to increase the prices by, let's say, 5% or 4% even. It's going to be a very marginal difference in terms of oil prices.